All right, good morning, everyone. This is Steve Kalina, President and CEO of MPMA. I'm sure we'll have a few more people trickling in here, but we'll get started with some couple of housekeeping notes and get started with the presentation in just a couple minutes. I want to welcome you all. Appreciate you taking the time out. I know we've got a lot of webinars and web meetings all day, every day, but obviously, hopefully the people that are on this meeting are here because it's an important topic. It's been a hot topic lately, and from what I've heard, the PPP applications are a little smoother, easier process this time around, but now, of course, everyone's still focused on forgiveness and some of the other pieces of the legislation. So before we get started, I just wanted to do a shout out to our new 2021 annual sponsors, which includes LB Carlson. So please, you'll see that on our Cycle Times emails, on our website and other areas. So please make note of our annual sponsors of MPMA. They're a big part of what MPMA is able to do, and I want to show our appreciation to them. And if nothing else, say thanks to them when you see them, and or otherwise, hopefully consider them for your business needs. New members that have just joined MPMA, we've got Shaw Lundquist, BusyWeb, and Trans World Business Advisors. So some great new additions that hopefully you guys, when you get a chance to welcome them, hopefully in person sometime soon. Our next program coming up is on February 9th, kind of another hot topic for a lot of companies that are going through federal contracts. We're having a program put on by Cyber9s on cybersecurity and the CMMC requirements of federal contracts. So it's been a big challenge and big focus for a lot of companies that are doing work with federal contracts. So if you have interest in that or needs in that topic, please check that out. And then, of course, last chance note for our Skilled Training Academy. The first cohort is about halfway through, and it's been going really well, but we're going to kick off our next cohort and start doing the orientation process. And classes start March 16th at Hennepin Tech. So we've got probably a couple spots left we can squeak students in, but otherwise it's for the most part full. So last chance to get students in. If you're interested, you can reach out to me if you have any questions directly. Otherwise, check out our website. We've got information. So on to our topic for today. Again, this is the new COVID relief legislation, and the next round of PPP loans has been a key topic the last few weeks, and people are still trying to get the answers they need and figure out whether they can apply for this next loan, if they meet the requirements or not. So the intent of these coffee chats is really to make it a small group and allow it to be more interactive. So it allows you to get some more direct questions answered and have some more interaction with the speakers. So we're excited to have LB Carlson presenting today. I've known them for about 30 years, and a great CPA firm, and great people to work with, including the three individuals that will be speaking today. So the three speakers we've got today, Dia Johnson is a CPA and principal at LB Carlson. Rob Younkers is also a CPA and principal at LB Carlson. And last, which will actually be our first speaker, is Rick Riesgraf, also a CPA and principal at LB Carlson. So I'll hand it over to Rick to start the presentation, and I'll leave it up to each speaker to kind of determine how they want to handle the interaction. They may allow for, you can interrupt to ask questions or use the chat function at any time. So you can plug questions in at the chat function. If it's something that's fairly urgent to get answered, we can maybe stop and ask, or we can plug it in when we get to the Q&A function. Otherwise, go ahead and, if the speaker invites you to, go ahead and ask questions and unmute yourself when it's time to ask questions. We have, again, a small enough group where we can kind of hopefully facilitate most questions. So look forward to it, and go ahead, Rick.
Thanks, Steve. Appreciate the opportunity to get in front of you guys today. It's been a long journey on this stimulus and economic aid and PPP loans all the way back to March of 2020. There's a lot of different versions of things that have happened along the way, and so we're trying to keep up with that. And so this webinar today is going to be focusing on the Economic Aid Act, as it's loosely referred to. It's the legislation that was passed and signed at the end of December by President Trump. It's effective now, and so we're going to cover the high points of that, but not all of it. It's too cumbersome, but we're going to hit a few points of that today. Just wanted to make sure that as far as questions go, yeah, feel free to interrupt. get our attention if you can. But we will definitely purposely stop during our discussion as well a few times and ask if there's any questions. And we know because of the difficulty of the topic, Steve, you said it's getting easier. I'm not sure it is. If there's questions afterwards or that we don't get to at the end, we will definitely follow up with you and try to get those answered. So I just wanted to start talking today about the Economic Aid Act, as it's loosely referred to. The act covered a lot of things. It took many, many months to get done because of the political wrangling, but when they finally did get there, it included COVID support for certain industries, healthcare providers, new rounds of stimulus payments, which aren't out yet in a lot of cases. A renewal of the unemployment assistance provisions, which are key, and additional loan support for like programs like EIDL and so on and so forth, and a new round of PPP funding and enhancements to the existing PPP funding, and some new really great clarification on payroll tax credits, and then some tax law changes that will help us along. We're going to focus on the bottom three today. If you have questions on the other items, certainly you can email us after or whatever, but we're not going to really touch on those today. We'll talk about PPP and payroll tax credits. Rob will do that. And then Dia is going to finish up with some tax law highlights. And so that'll be kind of our agenda today. The latest funding that Congress appropriated for PPP was $284 additional billion on top of what was already appropriated. So over $900 billion has been allocated to this program. It's been a monster. It's been confusing and probably full of some abuse here and there. And we're going to try to keep going through this and try to clarify where we can so that people do it the right way and get the maximum benefit of these kind of packages. So the SBA has issued 2 interim final rules to clarify what the latest legislation was. When they did that, the first time around, it took months to get those interim rules out. This time it took just a couple weeks, and they're extensive interim rules, but not as bad as the first round. So we've gone through those. All lenders are now in queue. There were some limitations on that to start with, but everybody's available and that's participating in this program and can take applications and submit your loan for you. So on the next chart, or the next slide, I'm going to talk today about several different PPP loans, and because of the long journey, it gets a little confusing. We have existing PPP loans, and what I mean by that, maybe those are the initial loans that we started with. Those expired last August. You couldn't get a loan after last August. Then in this new act, there's 2 new pieces. I'm going to call it new first draw loans and second draw PPP loans. Those are really 2 different things. But the Economic Aid Act gave the new first draw loans and the second draw PPP loans, as well as made some changes to the existing PPP loans so that you may even be able to get more money on those loans if you haven't already sought forgiveness. So I'll cover that in a minute. And then we'll cover a few other items on PPP, and lastly end up with loan necessity questions, because I think they're pretty key to this whole program. The next chart, I'm not going to go through this today. I put this in here because we've done this webinar a couple times before, and at the end of it, with all of our different PPP loan descriptions, people got a little confused of which ones we were talking about. So this is a chart that, as we go through things today, you can come back to this and, oh yeah, that's the initial PPP loan, or that's the first draw loan, that type of thing. So I'm just going to skip by it for now, but be a bit aware that it's there so you can go back and help clarify the loans. So the existing PP loans, or the initial PPP loans, if you will, those are the loans that caused the big stir in throughout most of 2020. Like I said, those applications for loans expired in August of last year, so you couldn't get any more new money But in this new act, there's certain things that they did that actually could change the amount of the loan. So I wanted to go through a couple of those provisions, Eric. Yeah. So in certain circumstances, you could actually increase that initial PPP loan. If you borrowed some money in that first draw or that first initial loan, and you paid it back and didn't draw down the full amount, you can now apply to reborrow or loan up to that initial amount. And so under the new rules, so there's a possibility that some of you have done that. I doubt it, but we have maybe one client that actually did that. If you're a partnership, there's some different definitions in partner compensation that allow you to get more forgiveness. And so you're allowed to redo your initial PPP loan paperwork now. And I'll go through this in a minute, but you could also now apply for different expenditures on different broader definitions of monthly expenses, and therefore maybe get a larger loan. And we don't probably not have any farmers and ranchers out here, but there's a new formula for them as well. So those existing loans could get modified. You have to ask your lender to modify those loans. It's important to note, Erica, can you move on? It's important to note that if you've already received forgiveness on your initial PPP loan, then you can't change anything. They're not, they've made a special provision, said if we've given you forgiveness of the first loan, then forget it. It's too much work to go back and change that again. So we'll cover this a little bit more later too, but this initial PPP loan did not initially include these covered expenditures. And new loans under the Economic Aid Act are going to add 4 additional categories that you're allowed to spend the loan money on that weren't in the initial loan. But now initial loans can use these if they want. If they haven't received forgiveness, they can actually change their loan forgiveness application to include these. So the 4 things are business software for cloud computing that you may have needed to build out, somehow connected to the whole COVID crisis. And that's a pretty broad definition, so I think they're going to be pretty loose on that. Payments to suppliers for essential operations subject to a contract entered into prior to the start of your initial covered period. We're getting a lot of questions on that one in the last couple of days. There hasn't been a lot of clarification of that item, but most of your suppliers are pretty essential to your operation, so that's pretty much a given. But what does it mean to have entered into a contract prior to the start of the covered period? A lot of times that's a PO. That's just, but it's more than just a handshake agreement. But we haven't seen any real clarification on that. Property damage costs that may have suffered due to the damage of the looting of the riots that happened this summer and beyond. That's a new qualified expenditure, and personal protection equipment costs that you have made either to protect your workers or customers or change your operation to comply with certain things. Those are now authorized loan use. So you could modify your initial loan for these, and in the new first draw loans and the second draw loans, those are also going to be qualified expenditures. So now I'm going to switch the Economic Aid Act, that $284 billion of new money that they've made available is available to do one of 2 things as far as PPP is concerned. Either take a new first draw PPP loan if you hadn't already received one, or potentially to get a second draw loan if you already had received one. I'm going to go through each of those, but I'm going to start with the first draw loans first. So very similar to the initial loans, these are out there. They're $10 million potential loans. So if you haven't got one in the first round, you can get one in the second round. The SBA is using the definition of their small business the same as they did in the first round. So if by chance you missed it, get on board now. But they've also expanded the definition to some groups that weren't included in the first round. Sole proprietors, self-employed individuals, 501c3 nonprofits, 501c19 nonprofits. And they put a lot of emphasis on this category, the NAICS code 72, which is lodging and food services, which everybody's heard about how the restaurants have gotten killed, or a lot of the hotels have gotten killed. They went out of their way to make sure that that category got highlighted in this new first draw money here. So, so they expanded up the definition of who qualifies, and so there is a possibility that you can get a new $10 million loan. Primary requirement is going to be that you have loan necessity, need. You have to demonstrate. You don't have to demonstrate it, but you have to have a need for this money. We'll come back to that toward the end of our discussion on PPP. Real important date to keep in mind. This is not a long-term open-ended program. Deadline March 31st, 2021. If you haven't submitted by then, you're going to be out of luck. So pay attention to that. The qualified expenditures, just like in the initial PPP, the primary thing they want you to spend the money on is payroll and benefits. 60% of the loan has to be spent on that. And then like the initial loan, you have mortgage, interest, rent, utilities, and then we added these 4 other categories again. So those are the qualified things that you can spend the loan money on. Forgiveness, you have to spend the money in this loan in an 8 to 24 week range. If you remember, the initial loan or initial PPP loans came out and they said they were 8 weeks, and many companies were finding that wasn't enough to spend the money, so they increased it to 24. So you had to pick one or the other. Now they're letting you pick anything in between. So it's kind of important because, and Rob will touch on it later, how it interacts with some of the payroll tax credit provisions, but also it allows you just to turn in the forgiveness as quick as you think you've spent the money and qualified for it. You don't have to wait for the full 24-week covered period to run. The loan amounts that how much can you borrow? Similar to the first loan, it was based on 2.5 times your monthly payroll. That's how most companies are going to be able to compute it. There is an exception. If you're a restaurant or a hotel, you can use 3.5 times your average monthly payroll to qualify for the loan amount. But again, the maximum under any circumstances is $10 million. So that's a real high level view of the first loan PPPs. There's a lot to it. All the rules that applied to the initial loan PPP loans apply to this one as well. The reporting requirements and the FTE calculations and stuff like that. So we're not going to go through all those and hope that you have had some experience of that on your own. Now, if there are questions on that, ask them now, or certainly ask them to us afterwards as well. I'll just pause here if there's any questions on what I've covered so far. I don't see anything in the chat room, or I don't see anybody unmuting themselves, so I'll just keep going. Steve.
All good.
So the second draw PPP loan. This is the second leg of the PPP money that's available with the latest round of funding. And it's probably the one that's getting the most attention, because if you got a first round loan and that was all, if that was it, then you'd be done. But they're giving you a potential chance to get more money if you're still, I'll say, in trouble. And that's going to be apparent when I talk about how they want you to demonstrate that. So again, the deadline for this loan is still March 31st, very key date. It's very quick in coming. But the conditions for this second draw PPP loan are quite a bit different than the first draw loans or the initial loans. And so we wanted to go through those in some detail with you guys. First thing that you have to do is certify that the loan is necessary. There's a form you have to sign that you have to have that money to continue to sustain operations. That's a little subjective, but it is definitely something they're going to require, and I'm going to come back to that when we're done here. The size companies that could borrow first draw loans was you had to be 500 employees or fewer. They've lowered this now to 300 employees or fewer. So they've kind of crunched down the definition of their small business a little bit on the second draw. So not quite as expansive. The other thing that's important to note is that your first loan has to have been used up, or will you anticipate to be used up by the time you're going to get your second PPP loan. I don't exactly know how you're going to have to report for all that. I don't know, Rob, if you've seen anything like that, you can chime in. But the important part is you're going to have to attest that the money has been used on your first loan before you're expected to get the second loan disbursement. So,
yeah, I haven't seen anything. I haven't seen anything on that, Rick. I mean, and I think there's been some different things we've seen from some different banks. I mean, some banks have, and I don't know if it was an SBA glitch or a bank glitch. I have no idea, but there were certain ones where I think we had clients that tried to apply for the second one and hadn't submitted their forgiveness yet, and they got kicked back. I had another one where that happened, and then they told them a couple days later that it was cleared up. So yeah, I'm not sure exactly how that is working.
Yeah, I'm going to touch on that in a minute too. Confusion reigns still. So probably the biggest new requirement though for the second draw PPP loan is that to prove that you really still are kind of hurting, they came up with this formula in terms of how that's going to work. You have to demonstrate that you've experienced a revenue reduction of 25% or more in either all or part of 2020 compared to 2019 to be even eligible for this loan. So that can be measured in a couple different ways that they've talked about. The borrower can demonstrate that reduction in gross receipts just by looking at a calendar quarter of any calendar quarter of 2020 and comparing it to the same calendar quarter of 2019. And they definitely say calendar quarter, so you can't use fiscal quarters, which is kind of beyond me on why they wouldn't allow that. But they are saying calendar quarter compared to the prior year. If you're down by more than 25%, you qualify to be able to borrow this. Or if your whole year is down by an obvious 25%, that comparing 2020 to 2019, you'd be able to qualify. So, Erica, can you go on? The gross receipts test is a new thing. It's a little complicated, but the gross receipts is a rather broadly defined definition from the SBA. They have a lot of guidance out there that they've used over the years on what gross receipts is. So, but basically, I think if you follow this recommendation, however you define gross receipts consistently for your business, apples to apples, that's how you're going to define it under this provision. And that can be whether you're a cash basis taxpayer, accrual basis taxpayer, or you've always had sales returns netted against your revenue. But I'm just saying, whatever the definition that you consistently used usually will work for this definition, and I think you'll be fine. One thing to note is the loan forgiveness of your first PPP loan is not going to be included in gross receipts, so we don't have to worry about that. How do you substantiate that reduction of 25%? They've given a little guidance on that, but I think they're going to be pretty liberal in how you demonstrate that. If you've demonstrated a whole year of being down 25%, you can compare you can submit your 2020 tax return compared to 2019, and it'll just be math that shows you're down 25% on the revenue line on the tax returns. You can use quarterly interim financials. I have had some of our clients their lenders have just asked for an Excel spreadsheet demonstrating 2020 reduction compared to 19 on a particular quarter. And there's probably multiple other ways you can do it. I think the lenders are working through this with borrowers. I think they're pretty flexible. They're all a little different maybe too, though, so keep that in mind. But you do have to generally substantiate that, and I'll get into that in a minute, if you're going for a bigger loan. So, another thing they did is this is an important provision. Where the other loans were $10 million maximum, this is a $2 million maximum. So your second draw can only be up to $2 million. The same formula is used to calculate the amount that you can borrow. It's 2.5 times your average monthly payroll, or 3.5 times if you're a restaurant or hotel. But in any event, the maximum loan amount is $2 million. Next slide. Getting back to that proof of the 25% decrease. If your loan application on the second loan is going to be over 150,000, that's where you have to actually submit the proof with the application. So your lender will take that from you, and they're the ones then that will move the application forward to the SBA based upon you satisfying that proof. Loans that are under 150,000 do not have to submit the proof to the lender, but those records should be kept because they may be needed when it's time to apply for forgiveness. Again, pause for questions. Second draw loans are getting a lot of attention, and we're helping a number of clients that are still going through some difficult times apply for those. As Rod,
sorry. I was just going to make a comment. I saw something late last week where the SBA wanted to substantiate that 25%, that they wanted people to submit interim financial statements to the bank with their application. And I think they were supposed to sign the first page of those interims and then initial the ones thereafter as kind of that proof. So,
yep, they want your John Henry on this for some reason. If that category is or if you're in that category, I definitely think you should be on top of this. But I'm going to come back to the loan necessity issue on the second PPP loans in a minute. So we'll talk about that. One of the biggest items contained in the Economic Aid Act, I think, and a lot of companies do, is that for months we had been telling you that the IRS had took a contrary position to what we thought was in the initial CARES Act, and they said the PPP loan is going to be taxable. This Economic Aid Act reversed the IRS, overruled the IRS, if you will, and said no. You know, we said it's tax-free. We meant it's tax-free. So they clarified that. That was just a huge impact for companies all across the country, and a big sigh of relief went out. So I just wanted to make sure we talk about that. But like anything, there's some complications with this. There's some tax basis issues, and not all the states are necessarily going along with the tax-free thing right now. So Rob, I was wondering if you could jump in and talk about that for a minute on tax basis and stuff.
Sure, absolutely. Erica, can you go to the next slide, please? So this would be primarily for our friends out there that are S corporations and partnerships, and we'll go through a couple issues here in a minute that you might run into with basis, but basically we'll take a step back and just do a real quick overview of what basis is. So for you that are S corporations or partnerships, basis is your investment in your business. So basically, what did you initially put into your business, and then each year your basis is going to move around based on whether or not you have income or losses from, and I'm talking about taxable income or taxable losses, and then distributions that you take from the company. So what is happening is when your PPP loan is forgiven, you're going to get basically an additional investment in your S corporation stock or in your partnership units. The basis is going to fall in the year that you actually receive what I guess I'm saying is the forgiveness certificate from the SBA. So a lot of you may have applied for forgiveness perhaps in 2020. Maybe you even got that certificate in 2020, in which case you'd have a basis adjustment in 2020. But I know for most of my clients, I told them to hold off, wait, just because the rules, kind of as Rick went through, were constantly changing, to wait and see if they were going to land somewhere. So most of my clients are probably going to apply for forgiveness in 2021 and receive forgiveness then. So this basis adjustment will happen then. Next slide, please, Erica. So just a couple of quick examples of what basis is. And unfortunately, in some cases, this horse has probably left the barn already, but just a simple example here where maybe we had somebody who was an S corporation and they had zero basis, and during the year they actually incurred a $100,000 loss, and they were actually able to fund that $100,000 loss because they received that PPP loan. Unfortunately, they're not going to be able to take that loss in 2020 because they don't have any basis, unless they did some other kind of injection of capital or loan before the end of the year. But in this case, we're assuming they didn't. So they've got that $100,000 loss that carries forward into 2020. And if we assume in 2021 that everything else is even, meaning basically in 2021, let's just say that now we've got gross receipts of 200,000, expenses of 200,000. We're going to get that additional basis in 2021 from that PPP loan being forgiven, and that $100,000 loss that was suspended in 2020. We're going to be able to take that as a deduction in 2021. Next slide, please. One other issue potentially with S corporations that partnerships don't need to worry about, and this would be for our S corporations that have always been S corporations. I'm sorry, these will be for our S corporations that have previously been C corporations. Sorry about that. We've got a few concepts out here, and there's a lot of acronyms, and not really going to worry about those. But I think what you want to worry about is if you are a prior C corporation, you probably want to contact somebody or look at your tax return and see if you have something called AE and P. And if you do, you want to be careful on taking your distributions out of your company if you have excess cash due to maybe taking this PPP loan, because you could end up with a little surprise, as we'll show you on the next slide. So Erica, if you go to the next slide, this is just kind of the ordering rules here. Again, we've got a real simple example. Your AAA is really your S corporation retained earnings. So those are the earnings. Obviously, you've got your book basis retained earnings, but AAA is going to be the amount of income net of distributions that you've accumulated during the time you've been an S corporation. And in this case, we're kind of showing what these balances are. This is a company that used to be a C corporation and had this AE and P, which are basically, I guess, your C corporation taxable retained earnings. And the way the ordering rules are going to work here, you're going to, if you take a $100,000 distribution out of your company, in this case, you're going to extinguish your AAA, then you're going to go to your AE and P. And what's going to happen in this case is you're going to end up with $50,000 that is taxable. So, and what's going on here is that the PPP loan, while it does provide you basis in your stock, on your Schedule M2, I guess, in your which is where your ordering of your distributions come out, it's going to go over into your OAA, which is after your accumulated A and P. So again, keep this in mind if you used to be a C corporation. Now, one thing that we're waiting still to learn on is, are they going to let us take those expenses related to the PPP forgiveness and also put those over in the AAA and the OAA column, in essence, making that over there a net zero and increasing our AAA. I mean, everything I've read out on the internet, that's still an issue that's out there. I haven't seen anything on that yet, so it's something we're going to keep monitoring to see if they allow for that, because that would be positive if they allowed us to do that. So any questions on this? Again, I know there's a lot of acronyms out there. It's not the easiest concept. I guess I'll look in the chat and see if I don't see anything thus far. So I think that's about all I had for basis at this time.
Okay.
Oh, I guess I had one more slide. Sorry. Just real basic. I mean, partnerships could have the same thing because of the at-risk rule. So again, if your partnership don't think you're totally scot-free, you probably just want to ask the question, hey, where's my basis before you, before you take any distributions out of there potentially. So.
Probably there's not much more to say on state conformity other than some states have conformed, some haven't. So make sure you check that out too before when you find it.
Yeah, absolutely. And I know we did this presentation previously, and I knew that Minnesota is a non-conforming state, meaning that we need our legislature to act for them to conform with federal law. I don't know if I know we're the MPMA, but I don't know if we have anybody on here from Wisconsin. I talked about Wisconsin last time, and Wisconsin is a conforming state, so they normally conform with federal law. But then somebody, and I didn't go and double check this, so if you're in Wisconsin, you might want to double check this yourself. But somebody went through our chat and basically said that Wisconsin decided that they weren't going to conform and that they were going to actually tax the PPP loan proceeds. So yeah, like Rick said, you're going to need to check in different states to see how they're handling this.
Actually, just before we started this meeting, there was a Senate tax hearing that I was sitting in on that they're having people speak and present information on the pushing for the
Minnesota tax hearing, is that?
What's that?
Minnesota state legislator?
Yeah.
Okay.
Yeah. So they were talking about the conformity and they said people speaking out of business owners and CPAs alike trying to push for it. So.
Yeah. The interesting thing about that, Steve, is, I mean, the way I look at it is the state of Minnesota isn't really out anything if they conform because they didn't give any of the money away. Really, it's kind of a windfall for them if they decide not to conform. But I guess maybe that's kind of my opinion. But
well, to sum all that up, consult your tax advisor if you have, as you report these forgiveness incomes from the PPP. It's a complicated little thing. So, but you don't have to pay tax on it. So it's a great thing that way. A couple other things on the PPP loans wanted to touch on. I don't know if any of you on the call got, when you applied in the initial PPP and they also had something way in the early stages of 2020 called an EIDL loan advance, which was a $10,000 loan advance that you could have got for free and wouldn't have to pay it back. It turned into a grant. In the initial PPP legislation, they said, well, if you got that, we're going to reduce that from your loan forgiveness. In the new Economic Aid Act, they reversed that and said, no, we're going to give that to you back too. But the way they're going to do that is the SBA is going to submit that payment back to your bank, your lender, and then the lender will turn around and cut you a check. So there's nothing to worry about on your application or your paperwork on your end of when you're doing forgiveness. But just be aware that if you had that $10,000, somebody owes you that money back. And they're going to give it to you, but it'll take a while. As Rob mentioned earlier, the lenders are having a little bit of a trouble right now. It's been in the papers the last few days too. They call it the SBA quirks in their software. We initially thought that this was a lender issue, and it's turning out it's an SBA issue where some of those applications are getting bounced. And so they are trying to work through that right now. The main issue seems to be centered around whether or not you had to have a forgiveness application in queue before you apply for a second PPP loan. And the initial guidance on the interim rules from the SBA said you did not have to do that, but some of the loan requests are getting bounced and saying you have to submit a forgiveness application before you can do the second loan PPP request. So we don't really know why that's happening, but they're supposedly working on it. Just wanted to make people aware of that. I wanted to finish up with a little discussion about loan necessity. If you recall, the initial PPP loans, the new first draw loans, and the second loans all require us as borrowers to sign off that we needed this loan. And the second draw loans probably go a little further because they're having you demonstrate that your revenues are down, and so they're making sure that you, in the second draw loans, really pay attention to that loan necessity. And I want to talk about it for a minute because we haven't had any audits by the SBA yet, but I do see signs that they're going to attack this issue pretty hard in their reviews. If you remember, there was a safe harbor given in the initial PPP loans where if you had a loan under $2 million, they assumed that you made a good faith loan necessity question because everybody back in March and April was like, oh man, I don't know what's happening and the sky is falling. And so they were going to give you a pass on whether you thought you needed the loan or not. If you were under $150,000 in a loan, the SBA somewhere along the line said, we're just going to assume you need the loan and we're not going to talk about it anymore with you. But that left a bunch that were over 150,000 that were a little worried about what's going to happen in the SBA reviews. So Eric, could go to the next slide, please. So like I said, below 150,000, I don't think you have to worry about it. If you're between 150 and a $2 million loan, that good faith loan necessity thing is good for making the statement that. So I don't think there's ever going to be any fraud or anything pursued if it turns out that they think you didn't need the loan. But I'm not sure yet if the SBA won't challenge some loan necessity. And so we definitely have a difference of opinion on that in our office, and as many webinars are out there on it on PPP, there's as many opinions about what that's going to mean. But until the SBA starts doing their loan reviews, it's something to be at least concerned about. We do know that loans over $2 million are going to have a required review and they have to prove that their loan was needed. We've seen questionnaires that the SBA is making those borrowers fill out. We know that they're going to cover that in their audit. And so it's an issue that SBA is paying attention to. So on the second PPP loan, we're just urging more caution. If you don't think that you can demonstrate a need for the loan, be aware that, and you still take the funds, that the SBA could require payback. But then here's the piece that we're not clear of. Could they assess fraud? Could they assess penalties? Could they refer you to other agencies? So we don't know what that means. We're in no man's land, and just wanted to bring it to your attention. And lastly, I just wanted to share some language that has come out recently from the PPP that tells us that they're going to be focusing in on this loan necessity issue. They've created a myth or fact sheet, kind of a publicity sheet for the PPP because they want to be seen as the good guys. And so here's one of the first blurbs they had in that myth or fact sheet. It says, to ensure all program rules were followed, all loans are undergoing an automated review. So that says everything's going to get looked at. All loans over $2 million are going to get a manual review or an audit. And then it says, in addition, any loan may be selected for a manual review or an audit. So even the smaller ones than that can get pulled for an audit. And then they're making sure the public knows the SBA has a robust process of ensuring the PPP loans were used as intended. It gets a little more even onerous in the next slide. In the SBA's frequently asked question, number 46, it says the SBA has previously stated that all loans in excess of $2 million and other loans as appropriate will be subject to review by SBA for compliance with loan requirements. If the SBA determines in the course of its review that a borrower lacked an adequate basis for the required certification concerning the necessity of a loan request, the SBA will seek repayment of the outstanding PPP loan balance and will inform the lender that the borrower is not eligible for loan forgiveness. If the borrower repays the loan at that point in time, the SBA won't pursue any other administrative enforcement. I think that means penalties and stuff like that. And they won't refer you to other agencies. So they're clearly saying that they're going to look at this issue for over $2 million loans and maybe for under $2 million loans. And if they don't think you needed it, they may challenge it. So that's why on these second loans where they've made a much bigger deal about the loan necessity and showing that you really needed it, we are recommending that if you can't for sure demonstrate that. Maybe not, don't take that loan. And we've had a couple powwows with clients that actually, believe it or not, are doing really well or pretty well considering COVID. They had a down quarter in 2020 that was more than 25% down than 19. So on that regard, they qualified, but their outlook and their projection shows that, you know, they're doing okay. We just are recommending don't take the loan because more than likely the SBA will come back to you on that. So I'm going to pause here before I move it over to Rob. But any questions on this PPP that we've covered so far? So it is a little confusing yet, Steve. So if there are questions, certainly talk to us afterwards as well.
Yeah, Rick, and I think you made the one thing you said is, I mean, you're going to get different opinions from different people on what is necessity. And one thing I've tried to stress with my clients is, hey, at the end of the day, you know your business far better than I do. I mean, I can look at what, you know, the data you gave me and see what I see, but you're going to know it better than I do. So ultimately, you're going to have to make that decision. And I don't know how tough a decision is, but whether or not you think that second PPP loan is necessary. So.
Yeah, I think the point is make sure you document that stuff into your files one way or another. It's easier to document it sooner rather than later. So I bet you're going to need that at some point to talk to somebody. So. Okay, Rob, I'm going to turn it over to you to talk about some payroll tax credit.
Okay. All right. So yeah, I'm going to touch on the employee retention tax credit. And this hasn't been getting as much publicity as the PPP loan, and a couple of reasons. Probably number one is I know when the first PPP loan round came out, I probably had 3 or 4 clients that called me up and said, hey, I heard something about this employee retention tax credit. Can I do that? And I said, well, did you take a PPP loan? And they said, yes, I did. I said, well, then you can forget all about the employee retention tax credit. Well, with the passing of the Economic Aid Act, they actually changed the rules on us again, believe it or not. And now, if you took a PPP loan, you are eligible for the employee retention tax credit. So I'll talk a little bit about what that employee retention tax credit is, how you can potentially qualify, and a few other things related to it. So there is a fairly big hurdle. And just so you know, there's different, and this might get a little bit confusing, but there are different rules for 2020 and 2021 for the employee retention tax credit. So for 2020, to be eligible for the employee retention tax credit, you would have had a calendar year quarter when you looked at the gross receipts and compared those to the calendar quarter from 2019, you would have to have had a reduction of 50% or greater in that quarter. So that's a pretty big number. Or you would have had to have your business fully or partially suspended by the government. And I believe, and Steve, you could jump in here. I don't know if you're still on, Steve, or not, but you could jump in and correct me if I'm wrong. But I believe all the MPMA members were probably designated as essential businesses.
Yeah, almost exclusively.
Okay, that's what I thought. So, you know, you'd have to be one of those companies that had a calendar quarter where you had a greater than 50% reduction in gross receipts to qualify for that 2020 credit. So that's a pretty big hurdle. So, excuse me, keep that in mind. The credit's available for all wages that were paid after March 12th of 2020. And it's also going to be available for the first 2 quarters of 2021. But the big change for 2021 is the gross receipt reduction only needs to be a greater than 20% reduction when you compare your quarter from 2021 back to 2019. And that 2019, that is the right number. I think what the government's trying to do here is they're trying to say all of 2019 was pre-COVID. So we're going to let you compare your first quarter of 2021, your second quarter of 21 to 2019. Next slide, please, Erica. Now, this is just the definition of gross receipts for the employee retention tax credit. It might be, I mean, I haven't studied it to make sure it's exactly the same as for the PPP loan. But basically what they're saying for the employee retention tax credit is they want you to use the same method for measuring your gross receipts that you do for your tax return. For example, I was just talking to a client yesterday, and they told me their gross receipts were down for the fourth quarter of, and I'll get to this in a minute why this would work, but their gross receipts were down by about 30% in the fourth quarter. And then I said, well, okay, on your tax return, you guys are on the cash basis method of accounting. Can you tell me what your gross receipts are down if we compare your gross receipts under the cash method? And when we took a look at that, they were actually about flat. So anyways, just keep that in mind when you're looking to see if you qualify for the employee retention tax credit. You know, you need to look to your tax return, see what method of accounting you're using, and make sure you're using the same method to measure your gross receipts. Next slide, please. Okay, changes to the 2020 credit compared to 2021, or changes that happen. I already touched on this, but you can now take this credit even if you have a PPP loan, and that would be for 2020 and 2021. The important thing to note is you can't double up on your wages. And what I mean by that is you have your PPP loan, you're going to use those wages for forgiveness. Wages that you're using for forgiveness, you can't also, during a certain time frame, you can't also use for the employee retention tax credit. And a couple of things to note here. I think we're going to need, I think the IRS, the Treasury is going to need to issue some additional guidance on this. Because there's certainly people that have already submitted for forgiveness. And are they going to tell those people that you're out of luck, you use the 24-week period? You know, or are they going to come back and say, hey, you guys can change around the way you applied? There's that. And then there's also some guidance that's going to need to be issued as to how you make different elections with regards to these two. So I'm going to tell you, I'm going to give you all the rules here, but then I'm going to tell you that there's some things that we're still going to need guidance on to figure out. And some of it is going to be the interplay between the PPP loan forgiveness and the employee retention tax credit. For the employee retention tax credit, you're also going to be able to use an allocable portion of healthcare costs to increase the amount that you'd be able to use for the credit. And in 2020, if you had more than 100 employees, the employees that would qualify for the credit would be those employees that you were paying basically to sit around and do nothing. It would be people that weren't providing services for the company. So if you had 100 or fewer employees, any wages that you paid would work. If you're a company that was larger than 100, then you need to look to see what were we doing? Were we actually paying people, not furloughing them, not laying them off, whatever? Were we paying them basically to do nothing for the company? For 2021, again, they made this easier. They raised that to 500 employees. So if you have less than 500 employees, pretty much all of your wages are going to qualify for this credit if you meet the other criteria. During 2020, the credit was $5,000 per employee, and that was capped for the entire year. And for 21, it's actually $7,000 per employee per quarter. So there's actually a maximum credit of 2021 of $14,000. So again, they've made it easier to get the credit in 21, and they've also made it more lucrative. There's more dollars out there to have. So next slide, please. All right, so here's where I'm going to do I'm going to give you a little example here, but first I'm going to say, I mean, you can't talk about PPP and employee retention tax credit without talking some about the fact that these items came around obviously because of the pandemic, and I don't know about the rest of you guys, but I've done a little bit of binge watching of some TV during the pandemic, and I don't know, any of you guys who've watched Cobra Kai, you're going to notice by some of my slides that Cobra Kai is one of my favorites. Probably, I mean, I suppose I'm right in their demographic. I'll let you guys know I'm 51 years old. So when the first Karate Kid movie came out, I think I was 13, 14 years old. And in September, I watched the first couple series, and I just couldn't wait for season 3 to come out in January. Finished it up about a week ago, and highly recommend it for all you out there. Now, I will say I mean, if you haven't watched it, there's some cheesy parts. There's a lot, and anybody else who's watched it, you can certainly get on the chat or chime in here. But apparently it has a 93% rating though on Rotten Tomatoes. So sorry about that, digress for a second. We'll get back now to talking about the really exciting employee retention tax credit. So, and I shouldn't say that because if we're going to be able to get dollars back for your business, this is exciting. So anyways, this is how the gross receipts test works for 2020. You can see by looking on here that during the second quarter, LaRusso Auto Group sales were bleak. I mean, we had a 60% reduction in our revenues, and therefore we were eligible for the 2020 employee retention tax credit. Now, the important thing to note then is you continue to be eligible for the 2020 employee retention tax credit until for a calendar quarter, your revenues rebound so that your reduction when compared to 2019 is, what's the right way to say this, is not 20% or greater. So if you look at this for the third quarter, we still had a down quarter where our gross receipts were 24%. So it was greater than 20%. So we continue to qualify for the employee retention tax credit. Now in the fourth quarter, we come back and we're only down by 19% for our auto sales. So therefore, for the fourth quarter, we would no longer continue to qualify for the employee retention tax credit. Next slide, please. And this is how the eligible wages work for 2020. In this case, you can see that Danny went and hired Johnny Lawrence to sell cars for him, and he's not going to pay Johnny a lot of money, it looks like. In this slide, what happens is if you're looking at this, we actually took the credit in the second quarter for Danny and Amanda. Amanda's Danny's wife, in case any of you guys are wondering. And so since we took that credit in the second quarter in 2020, we're no longer eligible to take the credit for them. We hired Johnny, sorry, in the third quarter, did not take that credit in the prior quarter. So we're able to take his wages, and I don't remember if I touched on this or not, but for 2020, the percentage of eligible wages is 50%. So in this case, we've got the $10,000 of wages that were taken for Johnny times that percentage, and we've got his maximum credit now for 2020. Next slide, please. Okay, some of the things I'm going to say are probably redundant just because I want to make sure that they stick. But just remember, you can now take the credit even if you've received a PPP loan, and that's PPP loan 1, PPP loan 2. And if you haven't applied for forgiveness yet, there is an opportunity here for planning. And like I said, I'm hopeful that the Treasury is going to come out for those that have submitted for forgiveness and let them revisit this. But basically, if I had clients, and like I think I said earlier, I had clients, and I told those clients, I think you should wait because the rules are going to change. Well, there were certain clients that said, I don't want to wait. I just want to put this to bed. And I said, absolutely, then let's do that. And whether they needed it or not, I typically said, well, why don't you use that 24-week period then? Because then you can put all of your wages on there for that 24-week period. You're going to easily achieve forgiveness. And not knowing anything at the time that they were going to allow any kind of interplay, that seemed to be, at the time, decent advice. Well, now with the ability to basically take your forgiveness period and make it any time between 8 and 24 weeks, you'd now want to, if you did have that in 2020 quarter where you had a greater than 50% reduction in gross receipts, you'd now want to take some more time and plan and try to reduce your forgiveness period by using utilities, by using rent, by using now those other items that are out there that are available for PPP loan forgiveness to shorten up that period so that you can double up and get your PPP loan forgiveness and be able to use those wages outside of that forgiveness period for this employee retention tax credit. Like I said, we're going to need to see some guidance on exactly how this interplay is going to work, but keep that in the back of your mind that if you haven't filed for forgiveness yet, you certainly can start to gather your documents, but what you want to do is try to see where you can have that period shortest. So when we do have some guidance on this, we know exactly what to do so that you can claim the employee retention tax credit as well. and I honestly don't recall if I have a slide on this or not, but what I want to mention is then how you'd claim this employee retention tax credit. It's actually claimed on your form 941. So you'd go back now, let's just say that you're eligible for this and say that, you know, part of the second quarter, maybe the third, fourth quarter for 2020. You probably haven't filed your fourth quarter 2020 941 yet, but if you have, you'd file an amended return just like you would for your third quarter 941 and second quarter potentially if you had eligible credits. So,
Hey, Rob.
yeah.
I just wanted to check in because we're at 11 o'clock now, and I know Dia still has some information to cover. So I don't know if I just wanted to try and give attendees a heads up. I know a few had to drop off already, but just wanted to kind of get a gauge on how much longer you think, so we can let people know if they're able to stick around or not.
Yeah. I mean, I think I probably have about another 5-10 minutes of material here.
So just so everyone's aware, you feel free to stick around, and if you have to drop off, obviously do what you need to do, and then we'll.
And then I think, Steve, just based on our run through before, I mean, we probably do go pretty close to the 11:30 marker after D is done. So,
okay.
So next slide, please, Erica. Okay, yeah, and some of this stuff, again, this is redundant, but the 2020, the employee retention tax credit is now available in 2021 for the first and second quarter. The threshold was less than the 20%. You're also eligible again if the government shuts you down, which again, in anybody on the line's case here is probably not the case. The credit is $7,000 a quarter instead of $5,000 total. And here's the one thing that I have not touched on yet. So this is what, again, when I said I was talking to this client of mine yesterday, and they were talking about their fourth quarter gross receipts, you actually can look to see for the first quarter of 2021 if you qualify by looking back to the immediately preceding quarter. So in other words, you can look at your fourth quarter of 2020, compare that to your fourth quarter of 2019, and if your gross receipts are down by 25% or more, 20% or more, sorry, I was talking PPP for a second, 20% or more, then you already know that you qualify for the employee retention tax credit. So just something important to note. And then kind of like the 2020 credit, if you know you already qualify, for the first quarter, you can wait and see until your first quarter is over to see if you qualify for the second quarter or not. And I believe, and again, I would probably have to check on this, but I think you can look back, and then I don't think you'd have to look back when you get to the second quarter. So you can kind of wait to see for the second quarter if your wages are actually down when compared to 2019 to see if you qualify. So next slide, please. Okay, and this is just an example of what I just said, that basically you can look at either your, you can wait until first quarter 21's over, you can take a look back to see if you qualify for the employee retention tax credit. Next slide. And then we just have a couple of examples here. Again, now this is for 2021. For 2021, you can look here and you can see that the reduction was more than 20% in each of the first two quarters. It actually continued into the third quarter. But since the credit's only available right now for the first two quarters, we've only got it for those first two quarters. Next slide. Okay, and this is just an example, I guess, just to show you for 2021 how powerful this credit potentially can be. Here we've got all these employees up to $10,000 of their wages are eligible. You can take 70% of their wages, and that's the credit that you get. So you can see here we've hired some other Cobra Kai characters here. I know somebody asked me, why would Danny ever hire John Kreese? And I said, well, I think you want to keep your friends close, but your enemies closer. So yeah, we've even got Sensei Kreese now working at LaRusso Auto Group. But we've got a $38,500 credit that's generated with only 7 employees and only for the first quarter. So you can just see how powerful that is if you have 20 employees or 50 employees or whatever it might be. I mean, oh. Sorry, Steve, I didn't realize that it was only supposed to be wrapped up at 11. Then I will move ahead quickly. Next slide. Next slide just kind of shows what happens for the 2 quarters. So for 2 quarters, you can end up with with, you know, basically we paid the same wages, ended up with double the credit. So, and next slide, I think that's the end. Let's see if you received, yeah, same planning opportunity where you're going to want to keep your PPP forgiveness shortened if you qualify for that and the employee retention tax credit. Yeah, so I think I can wrap up unless anybody has any questions. I think that's it. You can move on to the next slide, Erica.
All right, I will start out. I wanted to go through some of the changes that will impact taxes that came about from the CARES and Economic Aid Act. Thank you to those of you who are sticking around to hear this part of it. We are going to run over a little bit. The first thing I'm going to talk about would be charitable contributions. So what happened was back in 2017, when the TTJ Act came out, it changed the way people either itemize or use their standard deduction. So today, you're allowed a much bigger standard deduction. Most people aren't itemizing. So what Congress did is they recognized that there were a lot of charities that were probably feeling the downturn with COVID, and they're trying to encourage people to both donate, but also get their deduction for their charitable contributions. So what's happening is if you get a $300 above the line charitable deduction, so that means it's not itemized, it's actually deducted from your AGI. The second piece of that is we had been limited to take, our cash contributions could only take up 60% of our AGI, and they're taking away that limitation. So you can deduct all of your cash contributions for 2020 against your AGI, and that's cash only. It doesn't include your appreciated property, like appreciated stock if you're gifting that, or any gifts to private foundations. So both of these things are available for 2020 when you're filing your individual tax returns this year, but also they'll be part of 2021. Next slide, please. All right, so the net operating loss carryback. So what happens is same thing back in 2017 when the TJ Act changed things for us. We weren't able to do any net operating loss carrybacks. You can only carry them forward. So in 2015, we had a 39% maximum individual tax rate. Now we have a 37% maximum tax rate. If we have a net operating loss, the CARES Act allows us to carry it back now to 2015, any losses that we have. So that it's a small amount if you just look at the marginal tax rate. But if you think about what happens in your individual tax return with the pass-through information, in 2015, we had the DPAD deduction, which was a deduction of 9% of your US manufacturing dollars that came through as a deduction for you. Now we have the QBI deduction, which is 20% deduction. So the rate change is a little bit bigger. It's a little better than 6%. So if I have a bigger loss in 2020, or I have purchased equipment in 2020 and take that bonus depreciation, creates a bigger loss for me now, I can carry that back to 2015 and get both a bigger permanent tax deduction, but also cash in my pocket right now for doing those carrybacks. The other piece happened for 2020. We can't do anything about it now necessarily, except for be aware of it, is they did waive the fact that you had to take a required minimum distribution out of your retirement plan. So we won't be looking for those necessarily if people didn't take them. It's not that was not renewed for 2021. On the corporate side now, for a C corporation, the same thing happened here where we couldn't do carrybacks of net operating losses. So the CARES Act changed that to allow us to take those carrybacks. And the difference in the rates here, back in 2017 or the earlier years, it was 34% for a C Corp, and now it's 21%. So we have a little bit higher difference in our rate if we were able to carry back that loss and carry back up to 5 years. One note here, if you had losses in 18 or 19, you're allowed to amend those and get those benefits right now, the cash benefits right now. So and pass-through entities, when they came through for your personal tax returns, you were limited to how much loss you could take. You could only take $500,000. So the CARES Act removed that limitation so you can take all of your losses. So if you use an example, for instance, if you had $750,000 loss that came through into your tax return, you were only allowed to take $500,000. So that $250,000 then was basically suspended and carried forward for future years. Right now, you can get the whole $750,000 to offset income within your personal tax return. So it frees up some of the taxes that were paid. And again, you can amend 2018 and 19 to get the benefit for those. So AMT, in the TTJA Act of 17, it eliminated AMT for corporations. So what happened is then any AMT credit carry forwards that we had that were being carried from year to year, they were refundable 50% over the next 3 to 4 years. So what the CARES Act did is they said, we're not going to make you carry that forward. We're going to allow you to take that refund immediately. So any carry forward credits that were sitting out there can be taken on the 2020 tax return. So the interest limitation that's out there for 163J, you were limited to taking 30% of your tax EBITDA up to that for your interest deduction. So the CARES Act changed that where you now can take 50% of that interest against your tax EBITDA. That does not apply for partnerships, however. Back when the TTJA Act came out, one of the things were we think it was probably a oversight, the way it was written, but the qualified improvement property that was out there was not considered to be 15-year property, and you couldn't take bonus depreciation on that. So there's a technical amendment that was part of the CARES Act that does now state that qualified improvement property is 15 years. You're able to take that bonus depreciation, so you can write it all up in the first year, and this is retroactive back to 2018. One of the big changes that happened in the CARES Act, I think, will affect most people. It used to be that you could deduct up to 50% of your business meals and entertainment. They've changed that to 100%. As long as it's from a food or beverage provided by a restaurant. So they're trying to encourage people to help the hospitality industry. It has to be a qualified business expense. So you have to actually conduct business, have a business purpose for your expense. And the expense, this 100% business deduction will work for any expenses for 2021 or 2022. So as most people do have business meals, this should affect a lot of people and be able to get the whole 100% deduction for those meals. So some of the things we have, we're looking up always for opportunities for tax planning and communication, making sure everybody knows what to watch for. And things are going to be changing with the change in our administration, with the change of the control in the Senate, and how we're going to pay for the stimulus money that's out there. So I think there's going to be lots of opportunities here for tax planning. And some of those would be, so in the TTJA Act, there were a lot of provisions out there that had sunset. So basically they were provisions that would expire in 2025. And some of these things that I've been talking about changed those, some of the provisions, but not all. For instance, the lifetime gifting and estate exclusion was about a little better than 11.5 million per person. We've heard some things out there talking about reducing that back to the pre-2017 numbers, about 5 million or so. The qualified business income deduction, the QBI, is that going to stay out there or till the 2025 sunset, or is that going to be decreased before that? And then we've also heard things about tax brackets and tax rate increases for different taxpayers. So we're just watching all these things to make sure that we're staying ahead of the curve and knowing how to help clients with their tax planning. So that was all I had. I don't know, Rick, Rob, if you had any more comments on the tax provisions, or if there are any more questions from anybody who's on our call.
I didn't have any more comments or questions.
Sorry, I was muted. Sorry, I didn't have any more either. Just again, it's just more questions after this that come to your mind. Feel free to email us or send those through Lacey or Steve, and we'll try to help you out. So thank you for letting us participate today.
Yeah, thank you.
Lacey, you're on mute.
Yeah, Lacey, I can. Lacey, I think you're on mute.
Sorry about that, guys.
Oh, that's okay.
I thought I clicked the unmute. Just wanted to say thank you to everybody, and we will for surely be placing this recording out to those that attended, and it'll also be placed in our cycle times and on YouTube. So if you have any other questions, feel free to reach out. And thank you so much, LB Carlson. This was great information, I think, and will really be helpful to our members.
Thank you.
Everyone have a great
Thank
day.
you.
Yeah, have a great day.